Hello, everyone, and welcome to the webinar of the imperative of digital and how to keep up with rapid transformation. My name is Jose Caldera, and I am joined here by Julie Conroy from Aite, Novarica. We're going to do this in a minute. I wanted to give just 1 second, maybe one more minute for attendees to join us. So we'll start briefly the webinar. Just one more minute. And all right, we start. See if I get my slides in the right order. All right, just a little bit of housekeeping. So all the guests are going to be muted. There should be a section on your right-hand side panel of the GoToWebinar that allows you to ask questions. We'll address the questions. You know, if they come in the middle and pertinent, we'll answer them there. If not, we're going to answer them all at the end. And we will be sending the webinar, the recording, to everyone after that. All right, so my name is Jose Caldera. I'm the Chief Product Officer at Acuant, and happy to welcome you all to this session. With me, I have Julie Conroy, which I have had the pleasures over the year to do a lot of webinars with, and I'm always excited to do that. Julie, do you want to introduce yourself?
Sure, thanks, Jose. Always great to share the virtual stage with you. I am the head of risk insights and advisory for Aite Novarica Group. We are a advisory and consulting firm that focuses on the trends associated with the financial services industry. And so the trends associated with fraud and AML are definitely near and dear to my heart, as well as that of the team I work with. So looking forward to the discussion.
Excellent. Thank you, Julie. All righty. So what are we going to be talking about today? We're going to be looking a little bit of what we see or what we saw in the last 18 months or so. We're going to talk about, you know, the things that are driving the digital transformation, and we're focused a little bit on the things that we're seeing as hurdles that clients and institutions are going through, and then how some of these firms are preparing themselves to tackle those hurdles. And we're going to then focus a little bit on how Acuant is helping those clients in moving forward, and what are we looking at in the future from the product perspective of where we're headed with Acuant. And then we'll leave the Q&A, as I mentioned before, and just went backwards. There it is. So let's get started. Let's start talking a little bit of what we saw last year. So obviously, you know, everybody knows COVID. COVID made a lot of things happen, and we'll go into some of those details. But basically, the biggest thing was a gigantic surge, you know, online onboarding and transactions, in customer not present transactions specifically. And because of that increase, and because of different programs that went in associated with COVID relief and so forth, we see also an expansion of the typologies in fraud that we're looking at. So Julie, why don't you start us and talk a little bit about, you know, COVID and the effects of COVID in the market.
Yeah, happy to. So yeah, as we all in the North American market anyway, hit those lockdown periods in March of 2020, you know, all of a sudden branches were closed. You know, it was very difficult to do a whole variety of things in person. And so we've definitely seen that the pandemic has had the effect of putting the pedal to the metal on digital transformation. You know, we were already well along our way prior to the pandemic, we were seeing increasing adoption across all generations, but especially younger generations. But this really forced a lot of those consumers that had been sticking determinedly to their branch behaviors and not using things like P2P. It really forced those consumers into the digital environment. So at the end of 2020, we conducted a survey of over 8,500 consumers to understand, okay, now that you've tried these things, to what extent are you going to stick with these new behaviors? And as you can see from the stats on the screen, of those 8,000 plus consumers that we surveyed, 39% of those consumers had tried either a new digital channel, either online or mobile, for the first time because of the pandemic, or they tried a new digital product or service like P2P or mobile RDC. And as you can see from the chart, across all categories, the majority of consumers have every intention of sticking with these new behaviors. These consumers discovered that online and mobile banking is really convenient. So is P2P, so is mobile RDC. So as we gradually exit the pandemic, we're definitely seeing that we have much more of a digital first population than that with which we entered. As we look at the next slide here, we can see that it's not just digital, it's also consumers are increasingly mobile first. So we conducted another consumer survey earlier this year, this one across the US, the UK, and Germany. And we see that as you look at the engagement with specifically the mobile form factor, 76% of UK consumers are logging into their bank account with their smartphone once a week or more. 68% of US consumers are doing the same. In Germany is a little bit behind the curve, but even in Germany, half of consumers are using their smartphones to log into their mobile account once a week or more. And so, again, this just underscores the extent to which we have very much a digital first population, and also with the attachment to the mobile device, we have a population that is engaging with a device that can enable much better and customer-friendly forms of authentication to secure all of those transactions. As we look at the next slide.
Yeah, so I was going to say that it's that adoption, Julie, that you're referring to, right? I see it even in my family, right? With my mother, even with my grandmother, which is over 90 years old, and the other day she was asking me what was the multi-factor authentication, right? Which is interesting for a person that is over 90 years old and how she manages her accounts. But with all of this, right, what we are also seeing, and we see this in our client base, and we see this with, when we're talking to prospects, is really the expansion of typologies and the expansion of fraud cases that we're seeing. So there's no question that as we take more an online life, right, the models that we have seen in the past for fraud are just going to continue to increase. So we're talking about almost 150% increase in fraud. And as I said, I mean, when you compare detail, you compare the growth of the adoption, right? But that's a significant amount of increase in terms of how fraud we're seeing in the financial services specifically. In the same thing, we are getting about, obviously a decrease in resources that sometimes then affect obviously how these financial organizations are able to adopt new technologies and how are able to dedicate resources to get into into better solutions and in situations that can alleviate a little bit of the expansion of fraud. So, a lot of our clients are seeing, with the PP loans, for example, or are seeing much more cases of elderly abuse, or are seeing telehealth care, for example, more fraud in how people get access to healthcare. So all of this is, it seems to be correlated to not only the growth in online transactions, but it's also in the type of services and the environmental situations are happening because, you have more families living together, you have cross-generation families where people take advantage of family members, or guests, or housemates, right, that are there. So I don't know, Julie, if there's something you can relate to here, what you hear with your clients in terms of fraud and in terms of typologies associated with it.
Yeah, I fully agree. And I talk to financial institution executives, fintech executives, merchant executives. I think there's also a great concern that as we have seen this digital acceleration, and we have folks like your grandma that are now digitally active, this population is going to be more susceptible to a lot of the attack vectors and the scams. And so we now have a broadened attack surface, and probably, overall a more vulnerable population that fraudsters are going to capitalize on.
Yeah. All right, so why don't we take now a look at a little bit at what we're seeing as the major hurdles, right? It's not that people don't know that they need to go digital, right? The question is, how fast can you go, right? I mean, where you have a competitive market, where you have, especially in the financial services, where you have had a very steep increase in investment in fintech, right? That puts some pressure on the traditional financial institutions. But I think if I go beyond the financial services, right, and we think about government, and again, I think the relief programs associated to COVID, or the fact that that because there are more online financial services, that affects, and everything is moving more online, and that implies, for example, federal services, or TSA in terms of traveling, or in terms of hospitality. So I think that there is a wave, obviously, that we're pushing everything to digital, and it's not quite necessarily that people don't know or people are not on the road to do it, but so now it's a question of how fast can you go. And I think we're going to focus a little bit on if we think about this transformation and how fast it needs to go. I think we're going to focus a little bit on the challenges that we're seeing. So we did a survey not long ago in one of our webinars, and obviously we focus a bit more on the digital identity and an online identity verification, either from regulatory or non-regulatory processes, right? And it was very interesting to us that you still have a very significant amount of firms that are not quite there yet, right? Or they're not moving as fast as they would like it to be. So about 58% of the firms that we surveyed indicated that less than half of their IDV, or identity verification, and KYC interactions are still fully digital. So even though on that transformation, even though on the recognition that you have to go there, we still have over half of the companies and the financial institutions that are struggling to get there. So Julie, on your side, you guys did a survey with financial institutions. Tell us a bit more about that.
Yeah, I think that those stats are definitely consistent across all sizes of institutions that we interact with. And as you look at the small and the mid-sized community banks and the credit unions out there, I think many of them are really struggling to keep pace with the digital expectations out there. we have the survey that we conducted last year where you see that, as we asked community banks and credit unions the extent to which their customers are asking for digital services like Zelle, 67%, 2/3 of those 117 community banks and credit unions that we surveyed said that they are hearing those inbound demands. But at the same time, only 13% were actually making Zelle available to their customer base. And as I talk to community banks and credit unions in particular, a lot of the reticency to provide some of these services like Zelle, like online wires, some of these higher risk things they don't believe that their control framework is actually in a state that can support it, because they don't think that they can mitigate the risks associated with these types of transactions. And as I talk to small, mid-sized, and even some of the smaller regional banks, many of them are saying that they are seeing that their market share of Gen Z and millennials is decreasing, and they're actually losing market share with those younger generations. And most of the folks that I talk to attribute it to the fact that they cannot currently provide such robust digital features, functionality that a lot of the really, really big banks are doing. And we actually have consumer survey data that actually supports that shows that the top 10 or so national banks are increasingly getting the market share with younger consumers, and the smaller institutions are seeing declining market share with those same consumers, which just again reinforces the importance of having a digital first strategy, not just on your go-to-market, but also on your control framework and your security infrastructure, so that you can enable these types of transactions that are increasingly becoming table stakes for not just the younger consumers, but older ones as well. If we look at the next slide. It's not just the expectation of digital among financial institutions, but we're also seeing that there are just a whole bunch of fintechs that are seeing opportunities to encroach on traditional revenue streams that banks and credit unions have enjoyed. And there's so many examples out there. So you look at consumer lending, and you see folks like the SoFis of the world that are coming in with the ability to give real-time approval on loans that are 4 or 5 digits. And this is taking market share away from banks and credit unions that used to see this as a very profitable line item for them. Alternative payments, the Venmos of the world, that's progressively eating into some of the credit card interchange that banks and credit unions were enjoying in the online environment, and even banking services themselves. So you see folks like Movin that can effectively provide a full-fledged financial services experience to a consumer. Borrow Money started in the same place, and interestingly, Borrow Money started as a fintech kind of encroacher, and now they have a banking license and they're a bank themselves. So Jose, I know you guys deal with a lot of these fintechs. What are you seeing on this front?
Yeah, so it's interesting that when the whole fintech world was exploding, right, and starting to see a lot of investment into it, there was this notion that banks and traditional financial institutions would be looking at these fintechs and seeing ways that they could absorb those services, or they could expedite the way that they would offer services based on fintechs. And what we're seeing lately is also the opposite, right? So it's the fintechs acquiring banks licenses, or acquiring small banks, right, to help them feed or become more structure in the regulations, and then specifically the loan situation, it's easier, right? Because as a bank, then you're allowed regulatory wise to borrow money and to lend money in different ways. So I think there is a interesting trend that we are seeing where the world is converging. It's not just from the traditional into fintech, but also from fintech into the traditional, which I think is something that I think we're starting to see in the last 12 months and the last 18 months, which we hadn't seen before. So I think the convergence is happening as predicted, as is what's going to happen. But I think it's a more free ecosystem than at least I was expecting to see. So there, again, no question that there is an explosion of fintech services, and that is driving traditional financial institutions. But what we're seeing is that convergence in the marketplace. So 2 years from now, it's probably going to be just the financial services market, regardless of where you started from, right? But there's going to be likely not separation on that, and the needs are the same, right? I mean, it doesn't matter if you're a traditional financial institution going digital or fintechs likely starting digital, right? They didn't go through the brick and mortar type of situation, but there's no question that whatever convergence happen, whatever way the market moves, one way bottoms up or top to bottom, it's going to happen in the digital world, and that's where the convergence is happening without a question. One of the areas that we also see, right, and that in order to go digital then is really resources. And I think where a lot of companies are struggling is in finding the right resources. And even us, we're a high tech firm, and we are hiring at any given point in time, and we have, I think at the moment, we have something around 50 racks open, right? And we've been like this. I mean, we have hired a lot of people this year, and we still are in look for a lot of technical resources. And I think that is happening for financial. We hear with our clients all the time, oh, sounds great. This technology sounds great. I don't have the technical team. I don't have the IT team to help us get to this. There's not necessarily a lack of recognition of oh, we need this new technologies, and we need how the solutions they provide, and we need to better be prepared against fraudulent activities and so forth, or comply to the regulatory frameworks. It's a matter of, do we have the staff to actually take these solutions, right? So we're seeing a lot of clients, a lot of prospective clients that they want to move fast. They know they need to move fast, but it's a question of, do they have the resources to move fast? So I think us as vendors of technology and technologies in general, right, and looking for what are those solutions that we can give back to the to the client base in a way that they can help them get better at using solutions like ours without having to spend the amount of technical resources that are required to do so. So in the U.S. alone, right, where the estimation is that we're going to have a shortfall on developers, about 1 million within the next 10 years, sorry. That is a gigantic amount. And if the explosion of digital continues in the way that it's going, this number is going to be even more, more dire if we look at the growth of the market. So I think us as vendors, we have to continue to look for solutions, and we're working, and we'll see that in a minute, but working on solutions that enable clients to adopt technologies that are adequate to the level of fraud that we're seeing in the marketplace without having to have that amount of technical resources. So now that we look a little bit about the hurdles, Julie, I know you guys have done a lot of surveys in institutions as to how we are seeing, okay, how are they going to that? So why don't we spend some time talking about that? So how are firms preparing really to get to this digital first future?
So, as you look at the customer side of the equation, as we do see this, digital acceleration and, all of the expectations that have been set for consumers by digital first brands, with that digital acceleration very much comes real-time expectations. Especially as you look at Gen Z that has grown up talking to Siri and Alexa, and this expectation that, you just ask something and it happens, and, you get whatever you ordered same day or next day. So these are the consumer's expectations that financial institutions are having to meet as well. And we're seeing that many are stepping up to the plate. They're doing so. And so as you look at, going to apply for a credit card, and now it's not that you apply for a credit card and you get a plastic in the mail 3 to 4 days later. Many of the issuers now, as soon as you get your application approved in real time, you get a virtual card number, so you can start transacting immediately. Consumer loans is the same thing. Consumer loans is an incredibly competitive ecosystem where consumers are often going to a few different lenders concurrently, looking to see where they can get the best rate. And there's an expectation that they're going to be able to get their loan approved and even funded same day. And if you're not in a place where you can do that, you're going to lose that business. And this extends out to the e-commerce environment as well. So we've seen this surge of, buy now, pay later types of services out there that compete head to head with credit card for sure. And it's, as much as it's being touted as this new category, it's really not. It's kind of just the old layaway on steroids. But the common factor with all of these things is that the firms that are enabling them have to be able to analyze the consumer's risk profile and make a decision in real time. Gone are the days with all three of these different product offerings that you see on the screen here, where you had the luxury of maybe doing what looks like an approval to the consumer, but the fulfillment happens 1, 2, 3 days later. So you get that luxury of day 2, day 3 risk assessment. That's gone. It's really now, not only do you have to be able to fulfill and approve in real time, you've got to be able to do your risk assessment to enable those types of things. So as we look at the next slide, this is actually a piece of research that this audience is among the first to see. We're publishing this later this quarter. But as we look at what types of capabilities that issuers are looking for in their application fraud control framework and the solutions that enable that control framework, we asked a bunch of issuers in the US and the UK about the attributes of application fraud controls that were most important to them. And as you can see here, real-time decisioning, top of the list. In a number of the interviews that I conducted, the issuers said, this is table stakes now. You have to have the ability to do real-time decisioning, or else you are going to lose the customer. And automated decisioning is also incredibly important. And automated decisioning certainly is an underpinning of real-time decisioning, but it's also really important for maintaining the optimal OpEx expense and not having a ton of things go to manual review, which is not only time consuming, but really expensive. And one of the technologies that a number of folks said is important to enable all of this is kind of orchestration capabilities, where you bring in multiple different point solutions to help inform that real-time decisioning capability. But you have the ability to orchestrate, do you need all of those inputs, or based on what you know of the customer, do you need some of those inputs? And then conversely, on the back end, if you do have some yellow lights that you have some question marks again about, instead of automatically sending those to manual review, maybe you present them with a stepped up prompts, ask them for document identification capabilities, and potentially keep that out of your analyst queue and have the ability to automate the decisioning of those yellow lights as well. So as we look at the next slide here, to that end, as we're seeing this evolution of the application fraud control framework, this is another piece of research that we conducted this survey in September and October of 2021. We'll actually publish the resulting report in January. But we surveyed 32 financial services firms, their fraud and risk executives, about the way that they plan to iterate their control frameworks over the next couple years. As you can see here, identity verification controls and application fraud controls, as well as digital identity authentication controls, lead the pack. Part of that is due to the fact that we are seeing this increasing imperative for a control framework that can support real time. It's increasingly, as we are more and more digital first, you have to have the ability to bring in all of that super helpful digital metadata that you can look at in conjunction to see, does the email tenure and reputation and the device reputation and the mobile phone number and tenure and reputation, does all of that make sense in conjunction with some of the static PII data and how long that's been out there, and be able to see, does this identity make sense for somebody that is a genuine consumer, or does this look more like somebody that bought this static PII off the dark web 10 minutes ago and is inserting their brand new Gmail address that they just stood up 10 days ago in association with it so that they can set up a new account using this person's identity. So all of that is super important. And then if you can get that right at the front door and have the appropriate level of digital identity and application fraud controls, then you have major benefits downstream in terms of weeding out that fraud at the front door and not having it bog down your early life queues and everything else that then takes a lot of manual time and operational expense to unwind. As we look at the next slide, as we look at these investments, it's not just little tweaks here and there that people are planning on making. As you can see here, 69% of the same FIs that we surveyed said that they plan on making substantive changes over the next 1 to 2 years to their application fraud control framework. And in many cases, looking at the fact that it's not just about fraud prevention, it's also about enabling technologies that can provide better customer experience, minimize needless or non-productive friction, so that you're not dissuading good customers that are trying to get through the funnel and do business with you. You're not putting up roadblocks and causing them to go away. So as we look at the next slide here, we'll see that Acuant has a lot of perspective on this, and so I'll turn it over to Jose to talk about how they can help.
Yeah, we, as I said before, right, as product managers, as vendors in general, are looking at in trying to figure out, okay, how do, as I said before, how do we take the realities of the market in terms of constraint of resources, in terms of, if you throw a rock today, you find somebody that is doing some form of identity verification technology, right? So there is a lot of, rightfully so, confusion in the marketplace as to what do I need, right? What are the tools that are going to be more effective? And over the, I've been in this industry over 15 years now, and I've seen, when device fingerprint was the thing, and then when the email reputation was the thing, and when document is the thing. I mean, it evolves, right, and biometrics, and who knows what is going to be next. And what you realize very quickly, right, is that the solution that you're talking about is is a solution that has multiple aspects to it. And when you start putting all together these solutions, right, then it's complicated because you have to know which type of solution is better for your demographics. And you have to understand what type of controls that you can apply based on the different technologies that you have. So it's not simple, right? So the fact that there is technology out there doesn't necessarily imply that is easy to use. And at the end of the day, what we see our clients that care the most about, right, is how do I get more customers, more good customers, right? And how do I get more good customers that is not breaking the bank? Because a lot of the monetization of this new financial models, the margins can be small, can be big, depending on the customer, depending on the model. But there are situations in which you still want to provide a service, but you necessarily don't have the amount of money that it requires to then do that process effectively, especially when you're talking financial services. So we are looking is how do we solve what we see a three benefits that we want our clients to have. How do I maximize my customer acquisition? How do I do it cost effectively, that I'm always spending the right amount of money when I'm doing this, while mitigating the risk associated, preventing the fraud, and meeting the compliance requirements. So those are the things that are driving us, and in how Acuant is proposing those solutions, right? Is basically say, well, I want this amount of customers. This is my tolerance of risk. This is a regulatory framework that I may be part of, and how do we build then that solution that is adequate to all of this? So a lot of what we're working on is really understanding that there are tons of solutions out, and there are tons of different types of technology that you have to put together. In order to use those technologies properly, you have to build workflows and understand, if this happens, then I'm going to use this technology. If that happens, I'm going to. If my client is located in a jurisdiction like Mexico, for example, the regulatory framework is different than the United States, but also the data sources are different, right? So there are data sources in the United States, the same way there are credit bureaus in the US, there are credit bureaus in Mexico. There are different types of identities in Mexico that you need to understand. My point is that in order for you to put together what is the right way of doing onboarding, you have to understand that your demographics are different. You have to understand that technology that validates those demographics are different. So you have to be able to put and coordinate that effort into what we call workflows, and that allows them to really adequate what that user experience is. So Julie was talking about that, and again, this is something that every body that is doing in the digital world is very concerned about, is what is the right amount of friction that I have to put into, such that I can get, Jose's grandma of 90 years to use a service versus Jose or Jose's son that is 18 years old. Those are three very different user experiences that you have to put together if you really want to capture the breadth of that demographic. So that ability to create workflows and create that dynamicity that you need to do, that's where we're trying to focus. We have all the technology. We have an orchestration layer, as Julie was describing before. We have every piece of technology that you can think of that you need to use for identity verification, from document to biometrics to data centric to video KYC to the transaction monitor. We have all of those pieces, right? The question is not only having all those pieces, how you use them effectively. How do you use them in a way that actually can solve your problem? Again, maximize my customer acquisition cost effectively while I deal with risk and compliance. So the other aspect that you need is not just how you structure this thing and how you structure the way that you do your onboarding, but how to leverage the data that you're collecting. There is an insane amount of data that is collected in these processes. The question is how you put that data to function and to serve a purpose to your clients, right? So we see millions and millions and millions of onboarding situations on a monthly basis. And we see how different technologies are being used to facilitate those. So we have an insane amount of data when it comes to onboarding. So what we're looking at and what we're doing is, okay, we are seeing these workflows and we're seeing this process of technology and the application of these technologies, how it works in the environment. We're translating that into real analytics and real data that you as our client can benefit from. So the combination of allowing you to structure your onboarding and you structure the digital experience in different ways that is adequate to the different people, so you can introduce the right amount of friction to each one of these demographics, combined with the analytics and combining you with giving you data not only on the back end or how successful was document or how successful was biometrics or the different technologies that we have, but also how does that reflect in the user experience? Where was it that customer dropped in the onboarding? What technology was more effective to deal with that demographic and so forth? So the ability to leverage that analytics, that data set, is actually fundamental to the next step of what we're heading. So the way we see it, the way with our solutions, we see this again from the moment that the client starts the process, right? And to us, we want to help our clients to have control on this, on how you put this user experiences, because that the connection of the user experience with the backend is what's going to allow you to create these flows that are better, are more adequate to the different types of demographics of your clients. Then how we offer those, experiences in a way that reflect our learnings and our expertise of the different types of demographics, different types of, we call this the curated environment, curated journeys, and that's what we call them internally. And so from the point of how do I give you that user interface, how do I give you access to the best configuration and the best flow that is associated with that curated use case, curated journey, and those are close related to the use cases, right? It's not the same thing to try to onboard somebody, say, go through TSA on a country border, that try to get somebody in to have an e-loan, for example, right? So those are very different use cases. So the use cases that we're looking at are, we serve online onboarding, for example, in 17 different industries. Hospitality is different than government, is different than financial services. So you have to understand not only what we're serving, who you're serving it to, and that has to be connected. And then the orchestration, which is, again, Julie brought this up earlier on, and this is no question that you need multiple solutions, you need multiple services, but you have to know how to use them. You cannot just have them. There is a logic that sits on top of all of this that is the one that actually helps you understand that. And people confuse orchestration layers with gateway to third-party services. It's a component of that, but it's not the only thing. In an orchestration layer, a robust orchestration layer, you have to be able to normalize that. You have to be able to inform that data with your own business data. You have to be able to create models of risk and business and so forth that span the data that is coming, that you're getting from the clients, that you're getting from your business, that you're getting from the third parties, into a consistent layer of modeling, of risk modeling. And that needs to be then connected to your use cases, to your onboarding, to the journey that you want your customers to have. And without a question, you need a diverse data and technology ecosystem. You need all of that. You need the different solutions. We have core technologies. Acuant has core technologies on document, on biometrics, on digital identities, on social network analysis. But you still need more, right? I mean, our business is not trying to get data worldwide, right? So we partner with companies. We partner with people that do that. And new technologies are going to emerge as we look in the horizon, and behavioral biometrics is finally getting, for example, a lot of hype. So we need to make sure that we bring to bear those data systems, those technologies. So how we see this, how we're evolving, we're we're trying to look at the whole spectrum from the perspective of the user onboarding to offer curated experiences that are associated to the use cases, featured with a very robust orchestration layer that has access to a diverse ecosystem. That's what Acuant is doing. That's what we're trying to solve to the client. So we have some questions already. I am going just to read first one. So you mentioned that many companies are dealing with a lack of technical resources and developer. What is Acuant do to help companies manage this storage? Again, it's really about we have this platform that we launched and the ability to consume, and it's called Acuant Go. And Acuant Go is a no-code solution. So basically, it's a hosted onboarding solution. So you basically go and create in a user interface, and you go and say, okay, I want this process, I want to capture this data, I want to do document, I want to do biometrics, I want to do this, and you put all that together, and it's ready to go. The only thing you have to do is to embed a line of code into whatever your web user experience is. So very simple. As I said, there's a portal. You say, I want to do this behavior. That produces a line of code. In that line of code, you put into your onboarding experience, and you're good to go. And so that's how we are doing that. There's no question that you always have to do at least something, but we have done this. We have timed this. We have had people create a whole user experience within minutes. So it's very interesting. If you have more questions about Acuant Go, we did a webinar not so long ago that has all these details, and so I'm sure we can send you information about that. Another question, in terms of customer experience, removing friction from the onboarding process is always a goal. For a digital onboarding process, how do you best balance friction and customer experience? Julie, do you want to walk us through that?
Yeah, happy to do so. So, I think with this digital acceleration, the great news is that there is so much digital metadata that is available if you have solutions that have the ability to capture and analyze it. And so as you look at somebody coming in, and you can look at the way that they're entering the data. And, Jose, you talked about behavioral biometrics, and somebody that just bought Jose Caldera's data off the dark web 10 minutes ago is going to enter that data much differently than Jose would. And so that provides right there, just, a great set of inputs that you can leverage to inform your risk decisioning. Looking at the email, and is this an email that we have seen with good reputation and tenure across the past 10, 15 years? Or is this a burner Gmail address that just got set up 5 days ago? The device identity and reputation, and looking at all of the inputs that you can get there based on just the device itself, as well as the IP address. And then looking at all of this data in conjunction, and having the ability to put it through a risk engine that can determine holistically, does all of this make sense in conjunction with one another? Or are we seeing that this is an identity that first popped up 3 years ago, but all of the other associated digital identity data, the device, the email address, the mobile phone number, all of that just hit the roadmap within the last 20 days. All of those can provide you with a great set of flags, either green flags or red flags, that can help you determine when it's appropriate to put some additional friction in front of that applicant.
I cannot stress enough that point, right? That, as a consumer, right, of financial services, for example, right, and maybe I'm biased, obviously, because I know all this technology in a way or another, but I do expect certain level of friction if I'm signing up for a financial services. And if I don't, I actually, my my ability to measure the seriousness of the organization I'm dealing with. Actually, I have opinions about that. So, so as a consumer, I do expect certain level of friction depending on the service that I'm looking for, right? And it does send a message to the consumer base if you're doing the thing. Now, the same way I react, if I, again, knowing how data and technology is working for this purpose, I also react negatively if somebody's asking me for information that says, you don't need this, right? You don't need this piece of data. You don't need my driver's license to do this service and or to validate my identity vis-a-vis the service that I'm acquiring. So I think there is and of course, again, I'm biased because I know a lot of this stuff, but at the end of the day, when you talk to the clients, they have a reasonable understanding of what that is and what that friction should look like. So I don't think there is a I don't think there is a lack of understanding of the community about what it is. But I think that at the same time, you cannot feel that it is beyond what it needed to be. And I think that's the balance and that's the trick for when you're applying risk controls and identity controls is how you achieve that balance. This is a good connection to the next question, and maybe we're going to make the next question the last because we're running up on time already. But the next question says, with the rise in identity fraud, pretty clear firms are investing more in application fraud prevention. But what other things are financial institutions doing to stay ahead of the emerging fraud threats? Hila, you want to give it a go?
Sure. So I talked a little bit earlier about the orchestration layer and how a lot of institutions are moving to that. It can help to optimize the inputs that you're using. It can help to also optimize the extent to which you're inserting friction. It can also take a lot of burden off of your IT team, which, Jose talked about the fact that IT resources, they've always been scarce, but they're more scarce than ever now. So if you can rely on your vendor to be making those changes and adjustments and tweaks on your behalf, that can free up a lot of time spent waiting in queue to get things prioritized. There was one large regional bank I was speaking with a few months ago that, in order to get a new element inserted into their application fraud control framework, it took him 14 months. And with the pace with which fraud moves, you can't be waiting that long. In some cases, by the time you get to the end of the 14 months, whatever you are inserting is now obsolete because the bad guys have figured out how to blow through SMS OTP in that time. So I'm seeing a lot of focus on the orchestration layer. The orchestration capability set also is kind of like a Swiss Army knife. It not only applies to application fraud, but a lot of those same types of controls and tweaks can apply to your account takeover control framework as well. So whenever you can have something that can be leveraged for multiple problems, that's always a great news story, regardless of whether you're at a financial institution, a fintech, or a merchant.
Yeah, and I think that, just to add on that, and this is part of trying to understand the value proposition. And, we have many clients that in reality, they end up using, 15% of the capabilities of the orchestration layer, right? Because they found that, that particular function in the security that is better for them, right, across multiple use cases. But even for those clients, it's difficult to segment the user experience, right, in a way that they can say, oh, I can optimize this for this for that, right? And I think that that's where a lot of the value of these orchestrations layers come about, that allows you to segment that experience, right? And it allows you to have technologies that are more appropriate to deal, for example, with the demographics of clean credit files versus a demographic with a lot of credit history, right? So I think that part of the advantages of using this is that segmentation, and you can see which data sources or which technologies are more appropriate as a whole, right, rather than just a little bit, and then you can leverage each other depending on your understanding and the knowledge of those. All right. Uh, well, Julie, as always, a pleasure to have you with us. Always a pleasure to talk and work with you at a panel and a webinar. Any last things you want to say to the audience before we depart?
No, it was a pleasure working with you as well, as always, Jose. And yeah, I just, as we enter 2022, which is right around the corner, I think we're seeing lots of folks realizing that bolstering what they're doing on the application fraud front is going to be one of their key priorities going into the new year.
I couldn't agree more. Well, thank you so much, everyone, for attending and to spend some time with us. Julie, great having you. Thank you, everyone, and until the next webinar. All right, thank you.